let's start off with comments made by Reserve Bank Governor Gill Markets today about the recession relative to the actual crisis, and also saying that we're not on a normal downward cycle, citing a few negative factors that could even filter through into South Africa's economy.
Yes, I think she's making quite a lot of emphasis on the fact that the cure was supposed to be just to add liquidity to the markets, to make credit almost at giveaway prices. But I think all that is doing is feeding the problem. You know, I think that they're treating the symptom, but they're not getting to the absolute cause of the downturn, and that was too much credit made available to unworthy risks. This is not only consumers, this is sovereign debts as well, and I think there's not enough have been done about that, and that's exactly what she's alluding to.
Well, it seems today that a lot of the market is talking about a possible interest rate cut going forward. It's something we've been talking about, in fact, for a couple of weeks now. Give us your sense, Ian, and Gill Markets alluded to the fact that the MPC committee will react appropriately if we see demand pressures weaken even further. Are we reading between the lines here? Are we preempting an interest rate cut?
Well, I don't think so. Yes, we are expecting it, but you know, just look at what she said. She said, excluding administered prices, of course, the biggest culprit is Eskom, then inflation is not very high and hardly moving. So what does that say? You know, that core inflation, excluding food and fuel, is really not being put under too much pressure. Especially, she said, they're not seeing the demand pressure coming through. So maybe that leaves them space to say, you know, there is room, in considering the fragility of the economy and the size of the unemployment problem, to consider a rate cut. Maybe the FRAs, the forward rate agreements, have a good point in saying that there's a 30 or 40% chance that we could have a rate cut by the time we get around to the November meeting. It would fit in quite neatly.
Okay, Ian, let's touch on some corporate news out in South Africa today. Shoprite's profits up 14.2%. An interesting comment made by the CEO, Whitey Basson, is the fact that we're starting to see food inflation creeping into the market. And when you look at the last numbers that we saw coming through from Shoprite, and in fact other food retailers, still sitting very much in a deflationary environment. Competition is also going to have an impact on this, clearly.
Oh, absolutely, and that's going to keep food prices low, I think. If we look at global inflation, global food inflation, it's rising. It's at a high level and still increasing. But I think what we're going to see with the advent of Walmart in South Africa, and with their strategy to target the food sector, to get to make inroads with the largest portion of the population, they're going to see margins under pressure in the food sector. And I think that Shoprite, they're right in stressing that, but they position themselves very well to be able to take on the new opposition. I'm not quite so sure that Woolworths and Pick n Pay are quite as well positioned.
Would you say that what a very key point for Shoprite would be is the rest of the African continent and the expansion that we've seen there, given the fact that we've actually got to compare the profits in South Africa relative to Africa?
Yes, and I think you look at the margins in the rest of Africa, certainly far more generous, and I think that one's got to admire the strategy that Whitey Basson has had in moving earlier north of our South African boundaries, and I think he's been way ahead of the South African industry in that respect.
Let's touch on Illiad. We also saw numbers out from Illiad in today's session. Headline loss of 212.2 cents per share against earnings of 15.1 cents. It's also a drum that we've been beating for quite some time. South African economy not recovering, and it's evidence within the construction space.
Absolutely. The major construction sector, you know, all the big government-sponsored projects that were on hand, especially surrounding the 2010 World Cup, those big stadiums, the infrastructure around them, there was massive investment there. And private sector investment has fallen off dramatically because of the excess capacity that we have now in industry and manufacturing. And so I think what they're saying is it's come almost not to a grinding halt, but slowed down hugely. And Illiad, as a basic material supplier, is feeling the whip there, but what it points to is to be very cautious about the outlook for GDP as a whole looking ahead.
Eqstra also out with some interesting numbers today. Revenue up 9.3%, and we saw headline earnings per share came through at 77.9 cents from a loss of 21.7 cents. We're starting to see a bit of a turnaround there, and now we're even looking at possible acquisitions.
It's possible, yes, but you know, we must just be a little bit cautious. If you look at their nominal profit earnings, in 2008 they were twice that size, so it's still very much in catch-up mode. I think it has some more to do, but the management has proved that they're capable of doing that.
Would this stock be a buy for you at this point? We're talking about Equestria and Illiad and some of the smaller and the second tier stocks on the JSE. Do you take cognizance of these stocks, or is it just too risky right now?
I think it's too risky. Yes, you must take cognizance of it. You must look for a turnaround, because we may see it in the smaller companies. They're more nimble. They can move their strategy quicker than perhaps the larger companies. But I see no sign of a sustainable recovery. It's still just leveling out marginally better, but not in a go for growth outlook just yet.
If there's one sector that you should have exposure to at a time of a lot of uncertainty, Ian, which would it be? I allude to the PMI number, the flash PMI number out of China today. Still below 50 on the HSBC front, yes. But do you think that it is about having exposure to Asia?
Oh, I think one has to be. Geographical diversification is very important now, and one must include the strongest growth area in the whole world. And I think China, Asia, Southeast Asia and India, all those industrial nodes have to be followed. One has to have exposure. It's difficult, of course, to know how to pick individual companies, but one's got to look for asset management in that area and back those.